good morning, or whatever time you'll be watching this video. Welcome to Evans Enterprise Zambia, where we believe in making things simple, not complicated. So today we are going to do our lesson 1. We're going to embark into a series of lessons about Forex. We break it down, what really is Forex, so that many people out there can know or how to trade, more especially Zambians who have no idea really about this animal called Forex when it has been in existence for so many years. But Zambians are so ignorant about it. So, like I said, this is our lesson 1. Okay, so without wasting much of your time, we go right into it. So what is Forex? So Forex, the word Forex, F-O-R-E-X, okay, F-O-R-X. This is a made-up name, which simply means the F-O-R, this one stands for foreign, then the EX there stands for exchange. So when you put it all together, Forex simply means foreign exchange. Okay, so now what is the definition, the complete definition of Forex? Okay, so the foreign exchange, which is Forex, I've told you that the foreign exchange, Forex market, is one in which a nation's currency is traded for that of another at a mutually agreed rate. Okay, so this is where a currency of a particular country is traded with another. They come together and agree, okay, for you to buy my currency, you need to pay this. And for me to sell my currency, I need to pay this much. So that agreement will bring about a rate, or what we call exchange rate. We'll see when we go down the lesson. Okay, so this Forex market, like we have indicated here, this Forex market is run electronically within a network of banks, 24 hours and 5 days a week. Okay, you can even guess the days that are not included in these 5 days a week. So Sunday and Saturday, the weekends, the market is relatively closed, like the price is not moving relatively. Okay, so you can be in this market from Monday to Friday. You can be in this market from Monday to Friday without any problem. You can trade this market. This is an online market from Monday to Friday, 24 hours a day. Okay, so from Monday to Friday, it is a continuous market, doesn't close. Okay, so this is the largest market in the world, mind you. Forex is the largest market in the world. Like any other market that we have, here in Zambia, we have markets where they sell tomatoes, onion, we have fruits, we have bakery stuffs, all those things. So at a market, that is where buying and selling takes place. At a market, that's where buying and selling takes place. But in this case, we are not talking about a physical market where you can go and buy or where you can go and sell. We are talking about a market which is electronically. Okay, so this market which is electronically, since it is electronically, it has no physical location, like this is where it is located. It has the capacity to expand and cover the entire part of the world. because it has no physical location. Anyone can access it online. Okay, so no wonder it is the largest market in the world, and it trades per day $6 trillion per day. $6 trillion per day. Okay, so this is a very large market. $6 trillion is not money to joke with. So if you know how to tap in, you can be tapping in and getting your share in this $6 million which is traded per day. Okay, so now this concept of forex, although it is not common in Zambia, a lot of people don't know it, but other people from other countries, it is even a career. It is a professional career. They engage in it. It has been there for long. Even the Bible cites examples about it. One of the examples we can find is in Ecclesiastes 11 verse 1, which says, invest your money in foreign trade, and one of these days you will make a profit. Okay, so we can see that even way back, forex has been in existence. But why don't people know about it? Why don't people know how to trade? Okay, so let's move on. So what are the advantages of this market? Okay, so unlike any other business you can venture into, forex has a minimal investment. It has a minimal investment. You can start as small as $20, $200, $300. Those are small amounts that you can start trading with. Okay, so it has a minimal investment. But when starting, the investment that you are going to put is the investment of time, of learning. Just like any other profession, it requires time for you to learn the skill and understand the concepts nicely before you start making money. Okay, so one of the advantages, it has a minimal investment. You can start an account with just $10. You start an account. Okay, so when you know the skill, once you know the skill, you learn the skill, it has got minimal time of commitment. Okay, it's not like these jobs we call white collar jobs where you work from 6 to 6 or you work from 8 hours to 18 hours. No, in forex 1 hour, 2 hours, 3 hours, up to maybe 6 hours is enough for you. You can even go and do other things. Okay, so that is one of the advantages of forex. It has got it is flexible. You can bend your life around it once you learn the skill. Okay, so 3 to 6 hours a day is more than sufficient to trade the markets. Okay, so again, you don't need employees, you don't need an office. You can easily trade in your house, in your room, in your bedroom, wherever you are. For as long as you have internet access and the laptop, you can easily trade there. Okay, so again, what you have to understand is that forex is recession proof. Unlike the common businesses around, you find that when the economy is bad, when there are a lot of world events in the world happening around in the world, a lot of businesses, they crumble down and they go to their knees. Not forex. Forex, you can make money whether the market is going up or the market is crumbling down. You just have to know which direction you take when those events take place. So it is recession proof. You can make money either way. Okay, so to to succeed, you must be willing to work hard and master the professional skill. Okay, so most of the people who hear about Forex, they think it is something you can get money from it easily and be rich maybe in 1 week, 2 days, 3 days, but that's not the case. Forex, yes, it offers a lot of money, but it also takes money from you if you don't understand what you are doing. If you start Forex minus the right skills, minus the right mentality, you will come out poorer than you came in. Mark my words on that one. It is very serious. No wonder a lot of people have quit Forex and they no longer do it. It's because they thought it was the fast money. It was everything was just going to work on fast like that. But that's not the way Forex is. It's just like someone who goes to school to study, let's say, teaching. Someone wants to be a teacher. They will have to study for a minimum of 3 years for them to be qualified to have that paper to teach. And after they are qualified, they get employed. That's when they'll start getting paid. It's the same with Forex. You need to study. You need to be competent in what you are doing. And then that's when the earning will start. You learn first, then the earning follows. So that's how it works. You earn, you learn, then the earning follows. Okay. So let's talk about some common terminologies used in Forex. So these are just for beginners. If you have traded Forex before, you have come across these terminologies that I'm about to bring across. Okay, so you find the terminologies like exchange rate. So what is exchange rate? So exchange rate is just the value of a currency in terms of another. Okay, so this is just the value of a currency in terms of another. For example, you have the Euro USD. Okay, so they have given us an example. This is a pair. The euro is paired against the United States dollar. Okay, so that pair is 1.32. Okay, so that is the value of this pair. So what does this mean? This means that 1 euro will be equals to 1.32 US dollars. Okay, we'll go back to come back to these principles and you solidify them nicely. Okay, so another terminology that you are going to be finding more often is a pip. So what is a pip? So the pip is just the smallest possible price movement a currency can make. So a pip is the smallest possible price movement a currency can make. That is a pip. Okay, you're also going to come across a term called leverage. So this is just the ability to control large amount of capital with a comparatively small capital in order to gear your account into a greater position. Okay, so this magnifies both wins and losses. Okay, we can then say it is using borrowed money or borrowed funds by means of contract to increase the ability of your investment and gain a higher level at a higher risk too. Okay, so we'll learn more again about the issue of leverage, the advantages, the disadvantages, why you don't need to over-leverage and all those things. Okay, so if you're a beginner, just familiarize yourself with these terms that I'm putting across. Okay, you will learn them. They will be part of you if you continue studying them, and you see that most of these things you won't even be using them. Okay. So margin, what is margin? The deposit required in your account in order to open and or maintain a trade. Okay, the deposit that you make in your account, they will get a particular amount, and that amount that will be required to maintain or open a position is what we call margin. Okay, free margin. What is free margin? Okay, so this is the amount available to open new position. Okay, after they have gotten the margin, the one required to maintain a position, you remain with a certain balance in your account. So that balance is what we call free margin. Okay. Margin call. What is margin call? Okay, margin call. This is when a trade. This is when a trade's account falls below the required margin. Remember, for you to trade, you need to achieve the required margin for you to open a position. Okay, so now if you are trading and your trade has gone in a loss, it will not continue to go in a loss. They will call you out of that trade once you deplete the required amount for you to maintain that trade. So that calling out of a trade is what we call margin call. Okay, so most traders will automatically close you out of the trade, and you'll be at a loss. Okay, so another terminology here to you, you'll find a lot is spread. Okay, what is it? So spread is just the difference between the bid price, which is the selling price, and the ask price, okay, which is the buying price. Okay, the difference between the selling and the buying price is what we call spread. Okay, so another terminology is going long. What does it mean when someone says I'm going long in the market? Okay, so when opening a position that can only be profitable if exchange rate rises. Okay, so you only go long in the market when you have analyzed and you have seen that your trade is going up, like your trade will rise. That's when you go long. Okay, so we can then sell back our position at a higher price than we bought it. Okay, so like I said, forex trading is just like any other business. Okay, let's say someone wants to start a business of selling shoes. Okay, so they will look for where to order those shoes. Okay, it doesn't make sense for a person to go and order those shoes at a very expensive price and come and sell them at a very cheap price. No, that means that person will make a loss. So they will try by all means to order at a cheap price and sell at a very expensive price for them to make that difference. That difference that is there is their profit. Okay, so it's the same principle with forex. Everything is just same, but you just have to filter in some new concept and you are done. Okay, so what does it mean when someone is saying I'm going short? So when opening a position that can only be profitable if exchange rate falls. Okay, so remember, when going long, you are saying market is going up. So when going short, you are saying the market price will go down. So when you go in this direction, you are going short. When you go up, you are going long. Okay, so another terminology there is flat. What is flat? Okay, so when the trader has no open positions, so these traders no open positions, they're not trading, they are simply flat. They are not opening any positions. Okay, so price pattern. What is price pattern? So these are reversal or continuation price shape patterns. Okay, so all these, we'll look at them nicely and you come to understand them step by step. Okay, HTF, what does it mean? It simply means higher time frame. Okay, what are the higher time frames that are there? Okay, higher time frame, you have the monthly time frame, you have the weekly time frame, and the daily time frame. LTF, lower time frame. What are the lower time frames? You have the H4, you have the H1, and the 15 minutes time frame. Okay, what does it mean? BE. BE simply means break even. Okay, when you move your stop loss near your entry point or at your entry point, that is what we call break even. We'll talk about all those things, don't worry. Momentum, what does it mean? The dominant move on the higher time frame, that is what we call momentum. Okay, sentiment, using price action to judge the dominant direction. Okay, bias, what does it mean when someone is saying, no, I'm biased to this direction? Using sentiment to gain a belief of bullish or bearish. Okay, so we'll talk about these terms next. Bullish and bearish, what are they? Okay, so bullish, so price moving in an upward direction. Any price that is moving in an upward direction is what we call bullish. It is bullish. Okay, so you have a bullish trend, a trend which is moving up. You have a bullish candle, all those things. Any price that is moving in an upward direction in the market is what we call bullish. Why do we call it bullish? If you look at the bull, the way it fights the bull, when it has acquired its target, it usually tosses the target using these horns. These horns, it tosses the target up. So that action is what we are describing when you're in the market, bullish from the way from the way the bull fights. Okay, there's also what we call bearish. So what is a bearish market? So a bearish, this is the opposite of bullish. So price will be moving in a downward direction this way. Okay, so there is a bearish trend. When the trend is downwards, there is also a bearish candle which takes price down like that. Okay, so the same analogy with the bull applies with the bear. When a bear is fighting, it will push the victim downwards. Okay, so this action is what is described there, like bearish. And it is called bearish. Okay, so let's talk about the currency now. Okay, currency. There are a lot of currencies in the world. You can see in Zambia we use the Zambian kwacha. But what is currency? What really is this animal called the currency? Okay, so currency, this is just a system of money in general use in a particular country. Okay, so this is just a system of money in general use in a particular country. Like I said, Zambia, the general system of money is kwacha. So the currency in the United States is dollar, United States dollar, all those. So there are different currencies in the world. Okay, so each currency is given a 3-letter code. Okay, a 3-letter code, like the the currency for Zambia is ZMK. So that is the Zambian kwacha, the ZMK. So they will always have 3 letters code in them. Okay, so now since we have seen that the forex, we are trading currencies, like we are looking at currency, how it is moving and all that. So there are a lot of currencies in the world, a lot of currencies in the world. So in forex, we don't like trade all the currencies. We focus on only the major currencies, and as you can see here from my list here, these are the the major currencies we have. Okay, so we have the US dollar, you have the euro, you have the Great British Pound, you have the Japanese yen, you have the Swiss franc, you have the Australian dollar, you have the CAD JPY, you have the Canadian dollar, you also have the New Zealand dollar. Okay. Remember, these are not the only pairs, the only currencies we have. We also have these and a lot. I've just said we have the ZMK, the ZDR, the South African Rand, Singapore dollar, Norwegian krone, Danish krone, Swedish krone, all those things. Okay, so there are a lot. You can't say like name them all. Okay, so since we have currencies, Forex is quoted in currency pairs. Okay, so for you to buy or sell, they come in pairs. You can't just go to the Forex market that I want to buy the dollar. You want to buy the dollar against what? So that's the way it is. When you are buying in Forex, at the same time you are selling. When you are selling, at the same time you are buying something. Okay, so it comes in pairs, and there are basically three types of currency pairs that we have. There are basically three types of currency pairs that we have. You have the major pairs, the minor pairs, which are also called the cross pairs, okay, and the exotic pairs. Okay, so what are the major pairs that we have? Okay, so the major pairs that we have, a major pair is any common pair from this list. Okay, from this list of the commonest pairs, any pair from this that will be paired with the US dollar, that will be paired with this US dollar, is going to be called a major pair. Okay, so any of these seven, if they are paired with that one, the US dollar, they are going to be called the major pairs. Okay, so these are the pairs that we have, the major pairs that we have: 1, 2, 3, 4, 5, 6, 7. Okay, major major pairs. Okay, so the Euro USD, in short, it can just be called the Euro. GBP USD is also called the cable. USD JPY, the dollar yen. USD CAD, dollar Canada. USD CHF, that is the Swiss. AUD USD, that is the Aussie dollar, and the New Zealand dollar versus US dollar. Okay, so you can see the common thing in all these pairs is the USD. They all contain the USD. Remember, the US dollar is the reserve the reserve currency of the world. Okay, so they all have the US dollar in them under their code major pairs. Okay, let's look at the minor pairs and the cross pairs. Okay, so the cross pairs, they are formulated from the remaining 7 except the dollar. If they are crossed amongst themselves, they will come up with the crosses. So you have the euro crosses, the euro crosses. You have the GBP crosses. You also have the JPY crosses. Okay, so the euro crosses, you can have euro GBP, euro chef, euro cards, euro AUD, euro New Zealand, euro JPY. All these, they are euro crosses. The common thing again, they will all contain the euro. They will all contain the euro. Okay, then you also have the GBP crosses. So the common thing is they will contain the GBP. Okay, as you can see from here, you have the GBP JPY, you have the GBP card, you have the GBP AUD, the GBP AUD, GBP CHF. Okay. Again, the JPY crosses, these JPY crosses, they'll contain the JPY, the Japanese yen. Okay, so you have the New Zealand dollar crossed against the Japanese yen, the Australian dollar crossed against the Japanese yen, the Canadian dollar crossed against the Japanese yen, and the Swiss franc crossed against the Japanese yen. Okay, so this is all you'll be doing. You'll be buying and selling these pairs. Okay, more especially these the major pairs. Okay, so these pairs, they move a lot because they have the reserve currency of the world, the US dollar. Okay, and some crosses, some JPY, GBP, and the Euro crosses also. You formulate them, and that is what you'll be trading. So basically, that's it. It's just about the exchanging one currency with another, exchanging one currency with another. There's nothing complicated about it, apart from the fact that you need first to learn how these currencies move and how they behave in certain instances. Otherwise, I'll see you in the next video.